Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now, both Bitcoin and Ethereum are pumping to the upside, while Bitcoin is forming an extremely rare pattern that we need to pay attention to. More on that in just a moment, so definitely stick around. First of all, just giving you a quick update on the US stock market. This is the Nasdaq 100 index on the daily time frame, and obviously, as we can see here, over the past 2 trading days, we've seen quite a decent bounce from the exact golden pocket level of support, which, by the way, is sitting at around 12,000, just underneath 12,000 on the Nasdaq 100 index. And I went into more detail about what this means for the Nasdaq 100 index and crypto market in my last video. So if you missed my last video that I posted yesterday on the channel, definitely give that one a watch. But basically, the golden pocket is the Fibonacci level where we most commonly see trend reversals at, and the last time the Nasdaq 100 index ran into the golden pocket was the golden pocket level of resistance up here in around the middle of August, and obviously that sparked a trend reversal from a shorter term bullish trend into another shorter term bearish trend. And so, as I've been saying in these videos over the past few days, with the Nasdaq 100 index running into the golden pocket level of support and experiencing a bounce, because the crypto market and the Nasdaq 100 index are very correlated, while this is happening, this is actually a bullish signal for crypto. And obviously, this bounce has been playing out in the crypto markets as well over the last few days, especially today. Taking a look at the Bitcoin price on the daily time frame, we can see quite a significant pump during today's daily candle. And of course, this comes just after we confirmed that bullish divergence, which I talked about yesterday, telling us that we're due to see less bearish momentum. And basically, what reduced bearish momentum means is either a bullish trend reversal or just a pause in the downtrend and then continuing the downtrend later on sometime. But either way, at least as of right now, the bulls are back in control, at least in the shorter term, based on this bullish divergence. And this bullish divergence on the daily Bitcoin chart isn't the only bullish signal showing up right now. Obviously, we have the Bitcoin price getting that bounce from an important level of support, which is really a price range coming into play in between around 18,500 and 19,000. So in that $500 price range is quite a lot of support for the price of Bitcoin. And not only that, but with today's bullish candle, at least so far, we're experiencing a bullish crossover in the daily Bitcoin MACD. Now, I want to make it clear that this still needs to be confirmed with a daily candle close. And if that happens, if we get the daily candle close while the MACD is experiencing a bullish crossover on the daily time frame, then obviously that will be another bullish signal, giving us more confluence for the bullish scenario playing out, which is essentially a further rebound back to the upside. And if that happens, the bullish technical signals don't stop there, because if we zoom all the way out to the 3-day Bitcoin chart, right now we're actually forming a giant bullish divergence on the 3-day time frame that's been starting to form ever since the end of June all the way up until now. Because obviously, if you're looking at the 3-day candle closes, we have lower lows in the price action but higher lows in the RSI. But as of right now, at the time of recording this video, even though the daily bullish divergence is confirmed and was confirmed yesterday, as I said in my last video, the bullish divergence on the 3-day Bitcoin chart, at least as of right now, is not currently confirmed, because we still need to see this 3-day candle close in the green, which, by the way, at the time of recording this video, has around 16 hours to go until we see this 3-day candle close. And if that happens, if in 16 hours from now, when this candle closes, if the Bitcoin price is above 19,000, which would mean this candle would close in the green, then, as I said, that would confirm this massive bullish divergence on the 3-day Bitcoin chart. And in case you don't know, the larger the time frame, the more significant the pattern. And in fact, it is not very often that we see a bullish divergence on the 3-day Bitcoin chart, because if we're taking a look at the last time we saw a bullish divergence on the 3-day Bitcoin chart, that was all the way back here in the middle of 2021, during June and July 2021. And obviously, just by looking at the chart, you can see how significant this massive 3-day bullish divergence was for the Bitcoin price. And if you're going even further back to take a look at the last bullish divergence before that one that we saw last year, that would take us all the way back to the end of the 2018 bear market. As the 2018 bear market bottoms out, we saw a massive bullish divergence form on the 3-day Bitcoin chart, and obviously that was extremely significant for the price of Bitcoin. But it is important to understand that because this is the 3-day time frame, this is certainly not a short-term short-term signal. This does not tell us that we're just going to go straight to the upside over the next few days, for example. And instead, historically speaking, this is typically a signal that plays out over the coming weeks, if not months. And speaking of the 2018 Bitcoin bear market bottom, if we zoom all the way out to the weekly Bitcoin chart, this moving average, by the way, is the 200-week exponential moving average, which is currently sitting at around 26,500. And what we saw at the 2018 bear market bottom was the price of Bitcoin plunge below this important moving average, and then we saw a bounce back up towards this moving average. We did not break back above it immediately, came back down for almost a retest of the initial low, but we formed a slightly higher low in the Bitcoin price, which was basically a double bottom for the bear market bottom. And while all of that was happening at that initial low, we also saw the weekly Bitcoin RSI briefly enter into oversold territories for the first time since the previous bear market bottom back in early 2015. And now if we're looking at the present day, obviously looking at the weekly Bitcoin RSI, we saw the RSI enter into oversold territories during that June low. And that was the first time that happened since the bear market bottom of 2018. And that was the first time that happened once again since the previous bear market bottom back in 2015. And not only that, but obviously during June, the price of Bitcoin plunged below the 200-week EMA, somewhat similar to the 2018 bear market bottom. And then we saw a bounce back up towards the 200-week EMA. We failed to break back above it, came back down to pretty much retest the initial $17,000 to $18,000 low. But at least as of right now, the price of Bitcoin hasn't yet broken below that initial $17,500 low that we formed back in June. And so right now, the price of Bitcoin on the weekly time frame is at a stage where we are potentially forming a higher low, some sort of double bottom in the market. But in order to actually confirm a double bottom right here on the weekly Bitcoin chart, I'd like to see the price of Bitcoin actually rise up towards 25,000, which is this previous local high, and then break above that level, ideally also breaking above that 200-week EMA, which is sitting once again at around 26,500. And so as of right now, while the price of Bitcoin is obviously still sitting below some of these important levels like 25 to 26,000, we should not be getting ahead of ourselves because we're not exactly in the clear as of right now. But while the price of Bitcoin is potentially forming this double bottom, this higher low, this is something to at least be aware of, because so far, based on the price of Bitcoin on the weekly time frame and multiple other indicators, right now we're looking extremely similar to the end of the 2018 bear markets. But once again, I want to make it clear that I wouldn't get too confident in this double bottom, this higher low, until we see the price of Bitcoin start rising up towards 25 to 26,000. And especially if we break above those levels, then I'll become much more confident that we're playing out something similar to the 2018 bear market bottom and we're getting ready for another major rally. But for now, just zooming into the 12-hour Bitcoin chart, it's important for the price of Bitcoin to close a 12-hour, ideally a daily candle close above 20,500, because based on this previous golden pocket sitting at around 20.5k, this is important resistance for the price of Bitcoin to confirm a break above with a significant candle close like a daily candle once again. And if that happens, if we do end up seeing a daily candle close above 20.5k, which would obviously help confirm the breakback above this important resistance, then bringing out our Fibonacci levels of resistance, I'll be looking towards the 38.2% Fibonacci level of resistance, which is sitting at just above 21,000. And anything above that, I'll be looking towards the 50% retracement level at around 21.8k. And anything above that, we have this golden pocket level of resistance all the way up here at around 22.7 to 22.8k. So these are really the main levels of resistance that I'm currently watching for Bitcoin if we confirm a break above that 20.5k level with a daily candle close. But zooming into the much shorter term, taking a look at the 4-hour Bitcoin chart, just keep in mind the 4-hour Bitcoin RSI is currently entering into overbought territories as of recording this video, which means in the immediate shorter term, the Bitcoin price is getting a little bit too overheated. And typically when this happens on the 4-hour Bitcoin RSI, potentially in the coming hours, maybe over the next 1 to 2 days, just in the shorter term, we're due to see some sort of short-term cool-off sometime soon to help reset this 4-hour Bitcoin RSI. We can see it happening time and time again in the past, where basically the price of Bitcoin goes to the upside too much too fast, telling us that we need to see a bit of a shorter-term cool-off sometime soon before experiencing potentially more bullish price action later on. So that is a potential bearish signal just in the short term for Bitcoin. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum chart, and obviously we are still continuing this breakout to the upside from this bullish falling wedge pattern, with the first technical price target for this falling wedge pattern sitting at roughly around $1,800, just above 1.8k, which from the point of the breakout to that price target was a potential 18% gain. And so far from the breakout to the current day Ethereum price, at least as of recording this video, Ethereum is currently up around 10% from the breakout, and from the current price as of recording this video to that first technical price target, that is still another 8% gain approximately. And then if the price of Ethereum starts breaking above around 1840, which is where more specifically this price target is sitting at, then in that case I'll be looking towards the full technical price target for this falling wedge pattern, which is at the top of the wedge at around $2,000. But zooming into the shorter term, taking a look at the 4-hour Ethereum chart, obviously the price of Ethereum, after experiencing a lot of support from this golden pocket level of support, which is usually where we see trend reversals. Just taking a look at our Fibonacci levels of resistance for Ethereum on the 4-hour time frame, we have the 50% retracement level sitting at around 1720 to 1730, so we could find some resistance around that level. And anything above around 1730, then I'll be looking towards this golden pocket level of resistance, which is sitting at almost exactly 1800. So between the current Ethereum price at the time of recording this video and that initial price target for this falling wedge pattern at just above 1800, there's still these two important levels of resistance that we need to pay attention to, where it is possible for Ethereum to experience a bit of a rejection at. And now zooming out to the daily time frame for Ethereum, taking a look at that previous head and shoulders pattern, which was potentially forming, but especially with the recent bullish price action over the last 1 to 2 days, it's pretty much safe to say that this head and shoulders pattern on the daily time frame is no longer forming, especially if we see this daily candle close anywhere near around 1700 or above 1700, because in that case this right shoulder would simply be too big for the left shoulder and therefore invalidate the formation phase for this head and shoulders pattern. But obviously, if you've been watching my recent videos on this channel, this head and shoulders pattern, even though it has potentially been forming, it was never actually a valid pattern because we never actually broke below this neckline at around 1420 to 1430. And if you want to know how to maximize your profits in crypto during a pump like this, or even if the price is going down or just chopping around sideways, either way, you can make money in crypto by watching these videos popping up right here on your screen. The video in the top left of your screen shows you how to profit from bullish or bearish moves, and the video in the bottom left of your screen shows you how to make money during choppy sideways price action. But anyway, that's everything that I have to say for today. I really hope you enjoyed it, and I'll see you all in the next video.